I visited New York when I was 7, so that's 1989. I visited the stock exchange. You can actually visit it, and there's some notes from like a journal that I'm keeping, and I say like, I am really interested in stocks and bonds and gold and banknotes, and I like visiting the stock exchange, and I want to work there. And that's 7-year-old Arthur. So I kind of knew what I wanted to do. There's a very big difference between having studied this stuff and maybe like taking an exam and living and breathing it, and just like having it as a second nature, like just understanding it deeply enough that when you're presented with a product or a pattern, you can say like, oh, that's not going to work, and here's why.
So like you said, Wall Street is where the rubber hits the road, and you get to find out what's in theory and what's in practice.
There's a lot of very, very high tech in finance, but because it's so competitive, it's a lot more secretive than tech. People don't publish. So you have a lot of very advanced stuff that's being done. You have some of the smartest people in the world who are being hired, and no one talks about it because it's a competitive advantage.
Which makes the blockchain even more, mind-blowing for finance. Just the transparency alone is a massive revolution for finance.
Best money is backed by absolutely nothing. It just has a scarce supply and is backed by nothing. For me, it's just like the intersection of so many things. I was interested in decentralized currencies before Bitcoin came out. And my first thought was, what can we do with Bitcoin? What can be built on top of Bitcoin? How can Bitcoin evolve? Bitcoin is not a technology. Bitcoin is a ledger. Bitcoin is just a ledger of who owns what, and the technology can be replaced. All right, yeah, we can swap out the technology, that's great. And then you start thinking about it and you say, well, okay, but who does it? And how do we agree to do it?
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Arthur Breitman, the former research engineer, analyst, and Wall Street trader turned cryptocurrency entrepreneur. You founded the open source blockchain protocol Tezos with your wife Kathleen, and in 2018 completed an initial coin offering that raised $232 million and became one of the first projects to incorporate a proof of stake mechanism. You previously were a researcher engineer at Google X and worked as a trader for Goldman Sachs and Morgan Stanley. At Tezos, your focus from the outset has been on incorporating a governance model that enables users to decide how the protocol should evolve and leaves the future in the hands of your global community. Over the past year, you've experienced massive growth in DeFi and NFTs, announcing collaborations with big brands like Gap and McLaren. Arthur, welcome to London Real.
Thank you. Thanks, Brian.
Hey, it's great having you here. I think I want to start perhaps with maybe something that happened to you that also happened to me. You were in New York City, studying, I think, applied math and probably coding, and your next stop was to Wall Street. And I was at MIT studying mechanical engineering, and my next stop was Wall Street. We did it at slightly different times, and it sounds like we've both been fascinated with money since our early childhood. But I'm curious what maybe that experience was like. I know you're originally from France and you went there, but what was that transition like? And maybe you can bring us up to speed with how that happened, because it also shaped your journey, I think, to Tezos as well.
Yeah, so it wasn't accidental. I've been wanting to work in finance for a very long time. It was not the only thing I was interested in. So there's been two areas I've been really drawn to. One has been computer science and AI, specifically machine learning, and the other one being financial mathematics, statistics. They're both very quantitative, at least, especially the way I approach finance is very, very quantitative. So I was interested in these two things, and Even prior to doing my master's when I was still in France, it was either go to the West Coast, go to Stanford, and go do some AI or tech-related thing, or go to New York and try to work in a hedge fund or even start a hedge fund, do something like this. And I was really torn. And at the end of the day, I had it's probably not the best reason in the world, right? But I had spent a few years on a campus in France, and the campus was far from the city. And I was like, screw that. I don't want to be on a campus. I want to be smack in the middle of a city. So I went to New York and I went to NYU because I really liked the density of a city. That's where I wanted to be.
And that's right in the middle of it. I mean, that's in the West Village, right next to Washington Square Park. It's crazy. I mean, there almost isn't a campus, right? It's just the city and there's some buildings everywhere. But you wanted that. You didn't, because my brother went to Stanford and I visited him as well. And I was like, man, this is really snoozy out here. There's a bunch of trees and it's really pretty, but there's no city vibe.
Exactly. I didn't want to be in just like around students or an academic environment. I just wanted to be in a working environment.
Okay. Now, you told me a story of something that happened when you were 7 years old that kind of set this fate. I was wondering if you could just tell everybody a story you just told me.
Yeah. So I visited New York when I was 7. So that's 1989. I visited the stock exchange. You can actually visit it. And, there's some notes from like a journal that I'm keeping. And I say like, I am really interested in stocks and bonds and gold and banknotes. And I like visiting the stock exchange and I want to work there. And that's, 7-year-old Arthur. So I was, I kind of knew what I wanted to do.
Wow. Isn't it crazy how something sometimes pulls you to where you want to go, and there's like that dream,
Yeah, it was just fascinating.
Wow. I spent a summer at Ford Motor Company as a mechanical engineer in Dearborn, Michigan, working on an assembly line. And even though I had a Ford Mustang as a kid, it was a dream. I realized, man, this wasn't where I wanted to be when I was 40, 50. And then I took a finance course, started getting the Wall Street Journal, watched the movie Wall Street, and after that,
I watched the movie Wall Street too when I was a kid. I mean, I know this is the last thing that Oliver Stone wanted, but I think that movie has inspired so many people to work on Wall Street.
Oh yeah. It's like, I think it's one of the greatest movies ever. I think it's actually almost like a story from the Bible. There's so many lessons.
It's a beautiful movie. Loved it.
But I saw an interview with Michael Douglas who played Gordon Gekko.
Yeah.
And he said, people come up to me on the streets and they say, thank you, you're the reason I got into finance. And he says, no, I'm the bad guy. I'm the villain. You're supposed to hate me and not do this. And everyone's like, no, you're inspiring me. And that's the way it was for me too.
Yeah.
Bud Fox and Gordon Gekko. I still watch that movie to this day.
It's a great movie.
So you're at NYU, you kind of know you want to move into finance at some point. You're finishing your master's degree. Again, it's not just finance. You're into AI, machine learning, a lot of these other things. That next decision as a job, how did you make it? And then what did you do? Because you had some serious statistical arb and trading experience on Wall Street.
Yeah, so I wasn't, I wasn't like never like trading on Wall Street. I was a quant, so I built trading algorithms. But there's always, a trader that's monitoring the trading algorithm or making risk-based decision on the algorithms. But I wasn't, in front of the screen directly. Although I've been I manage a portfolio at one point, but that's, I wouldn't call myself a trader for it. The thing that, the relationship that I saw, it was like, okay, so I have all these ideas in AI. Can we use all of this AI and this machine learning in finance? And the answer is largely no. And this is a long and interesting discussion. Because to make it short, a lot of the research, like a lot of the cutting edge, super interesting research that has come up in AI is about structure. You have an image of a bird. Is there a bird in the image? Yes, obviously there's a bird. So there's not a lot of noise. There's a bird, but the relationship between the presence of the bird and the pixel of the image is extremely complicated. So you need to untangle that. That's what deep learning does. In finance, we're in a completely different mode. There's very little information because all the information is consumed by the traders and is incorporated into the prices. So you have very little structure and lots of noise. So you are in the realm of statistics. So it's also super interesting. So I got more into Bayesian statistics because that's how you live with like large amounts of noise. But I also was interested in this structure thing. So the structure thing is good for AI, vision, all of that. It doesn't mix very well with finance, as I found.
Interesting.
But there was also there were two categories of people going into finance. A lot of my peers were doing were derivative quants, so they were pricing derivatives, and you're doing stochastic calculus and partial differential equations, lots of very, very heavy math. But I was a stats person. I was into probabilities, and so that led me more to stat arb and market making.
And your instruments of choice were typically futures, just something liquid with a price history.
I've done a bunch of everything.
Okay.
So when I started out, the first product I was touching was the euro-dollar future.
Okay. Yeah.
But I've done also commodities future, natural gas and oil, and a lot of ETFs.
Okay. I used to trade all the euro-dollar futures, but with a swap book and the fixed floating exchange and all that stuff. And again, I was the trader, and there's behind every great trader is a great quant. And sometimes it's not obvious who's actually making the decisions.
Mm-hmm.
Sometimes
depends on the strategy.
The trader always likes to think that they're making decisions, but oftentimes it's based on what the quants are doing. And if we didn't have our research team, we couldn't price all of our complicated options, even though we probably took credit for the P&L more than we should. What did you learn, big takeaway lesson from your time on Wall Street? How long were you there? And as you look back on it now, did you learn some important things that even helped on the Tezos journey?
Yeah, I mean, first of all, just a good understanding of finance. Like how does it work? How does financial instruments work? Just the basics. And sometimes you think some stuff is just undergrad, basic financial theory, but there's a very big difference between having studied this stuff and maybe taking an exam and living and breathing it, and just having it as a second nature, just understanding it deeply enough that when you're presented with a product or a pattern, you can say oh, that's not going to work, and here's why.
Yeah, and under pressure with P&L and positions.
Yeah. So this type of reflexes. I learned a lot about finance, about derivatives, products, microstructure. I would say in general, financial economics. I like a lot of the thing that I like about finance, especially if you look at the high frequency, that it's very, very much no bullshit, because immediately if especially with high frequency, immediately if you're wrong. Now, if you're someone and you say I'm a macro trader and here's what oil is going to do over the next 20 years, how many times are going to be proven right or wrong? Whereas if you have a view and it's going to be validated in the next day, you're going to know who's right, you're going to know who's wrong. So a lot of the economics that you find in financial papers is very verifiable. There's a lot of concrete evidence for it. It's very, very solid. And then as you move to microeconomics, it becomes a little less solid, but it's still very, very principled. And then you go to macro and it's kind of free floating because it doesn't have this contact with reality.
Yeah, the contact reality is what Wall Street's very good at. I took a bunch of classes at the Sloan School of Management in futures and options.
Yeah.
And then I remember I tried to get a summer job at Bankers Trust, and I called one of the traders up on the phone who was an MIT grad. And I could hear people yell in the background, and I said, "Hi, my name is Brian. I'd love to get a job." And she just barked down the phone. She said, "What's the delta of an at-the-money call option?" Okay. Now, I'm 21 years old, and I'm at MIT, and I just studied maybe a one options course. And I was like, and she literally was like, "Answer me." I talked to her a minute, like a trader. And I said, one, which is completely wrong.
One half.
It's one half. One half. And any idiot would know that. But the thing is that it's one thing to study finance at Sloan, but on a trading floor, you'll learn that real quick, or someone will slap you, or the P&L will hit you. And so, like you said, Wall Street is where the rubber hits the road, and you get to find out what's in theory and what's in practice, right?
The other thing I've learned, and I'm reluctant to share that because if you're looking at it on the other side, it just, what I'm going to say, I make it sound so obvious. And you say well, you're an idiot. You should have known that from the get-go. But a lot of people make that mistake, is just how competitive markets are. Everyone and their mothers think that, markets are not efficient. You can beat the markets very easily, yada. And over the years, I've had people saying oh, look, I have, the strategies that I backtested, look, it works, and so on and so forth. And there's just so much work between a strategy that kind of looks good on paper and you're actually trying to run it. And then you find that there's transaction costs, and then you find all of this and so on and so forth. And if you've not really tried it, it's very easy to convince yourself of if I use this new technique or new statistical technique and so on and so forth, it's going to, and it doesn't work. And what you realize is that there's a lot of very, very high tech in finance, but because it's so competitive, it's a lot more secretive than tech. People don't publish. So you have a lot of very advanced stuff that's being done. You have some of the smartest people in the world who are being hired, and no one talks about it because it's a competitive advantage. Yeah. So just from the outside, it's very easy to not realize how incredibly competitive it is and how incredibly efficient the markets are, especially on the short run.
That's a great observation. And again, you grew up also with the high frequency trading and much more algorithms than I grew up with. But that's a brilliant observation. It reminds me of something that I was taught on Wall Street and the City of London, which is everything's a secret. You don't post your derivative trades between counterparties. This is one of the reasons that the crisis happened, because nobody knew where the risk was. I used to get uncomfortable ordering my Starbucks order in front of other people because everything was quiet. It was not posted about, because you knew if you told someone, they would argue. Maybe not the next week or the next month or the next year, but if word gets out on how you're making money on Wall Street or London back in the day, it was only a matter of time. So there's a culture of secrecy, isn't there?
Absolutely. And if you look at tech and startups, everyone will tell you, oh, if your idea is any good, no one's going to be interested. People who don't want to talk about their startup IDs or NDAs are losers because it's all about execution and so on and so forth. Yeah. And I'm not making fun of it. I think it might be true in for a lot of tech startups, but it is absolutely not true in finance, where secrecy is actually very important.
Yeah, which makes the blockchain even more, mind-blowing for finance, not to mention the incredible technology and the peer-to-peer sharing and the Web 3.0. Just the transparency alone is a massive revolution for finance. And that's one thing I think I'm still trying to get my head around, is that, everything's transparent and it's on this blockchain. Whereas in the Wall Street world, everything possible is kept secret. Okay, a futures trade is public, but anything else around it, you're right, is secret. And that makes this market very interesting. All right, you made a conscious choice, though, to leave Wall Street, and I appreciate your observation that it can't be cracked with AI, and I think you might be right. And then you decided to go Google X, Mountain View, driverless cars, maybe pursue that itch you had for the AI and machine learning that you weren't using on Wall Street. Am I correct in that assumption, or why make that?
Yeah, no, exactly right. So I had this, first of all, I did it for 10 years, and it was super interesting. I learned a lot of things. At one point, I felt like I wasn't learning as much as I wanted to learn, and I wanted to do something different. The other thing is, I really wanted to do AI, and I wanted to use AI where it would work. The other thing is that it's a very adversarial environment in finance, and I don't mean that in an unpleasant way, but I mean that the universe is conspiring against your learning algorithm to work. People are taking away all the signal, like I mentioned, whereas if you're doing self-driving cars, the other cars on the road are not conspiring to drive you off the road, which is not to say that everyone is a very nice driver, but more or less it's cooperative. People aren't trying to trick your car into driving off the road. So it changes the problem considerably, and it makes it a very, very different problem to not be in an adversarial environment. Unfortunately, now that I'm back into blockchains, again, you're dealing with security. Security is very much like market making, in the sense it's like you're playing defense. You have to cover every possible angle, so it's very adversarial. But at least with the self-driving car, it's not as adversarial, and so that was super interesting. And I wanted to do something very different, see a different part of the US as well.
Right, I can see what you mean. Also, from a personal perspective, I mean, every other trading firm is trying to eat your lunch.
Yeah.
Even the individuals in Wall Street, it's as I don't know what it's still like, but it's still quite aggressive. And after 10 years, that energy is it's hard to deal with, right?
The other thing is it wasn't as competitive in a sense that of course it's competitive to get a job there, of course, but there weren't that many companies competing with Google in self-driving cars. You had basically Uber and Tesla, right. And sure there's, and even then I would say that Google was miles ahead of the competition. You're not dealing with trying to scrape little bits,
right?
So it's very different environment. It was super interesting.
Right, you have a real competitive advantage. You have a lot of capital. You got a lot of things you can do, and you're not fighting over that 1/100th of a basis point.
No, absolutely.
All right, so you go to California. You have an experience with Google X, self-driving cars, all that. How do you summarize that experience? What did you get from it? Because I know at that time you started learning about probably blockchain and crypto, right?
No, I got in way before that.
Before that. So you moved to California in
2016.
16, okay.
Yeah.
And you were looking at this early.
Oh, yeah. I mean, I heard of because pretty much when the paper came out, but I didn't pay any attention to it, unfortunately. I started really getting interested in 2011.
11, okay.
But not too engaged, but like interested, I'm following. 2013, I started saying, like, I need to do something here.
Okay. Which is very early still.
It's still early, yeah,
Very
by all accounts. But 2013, I was like, okay, there's really something here. My experience in California, I have an anecdote for this, which is, I think, telling. I'm really bad at recognizing faces. So that's, like some people don't recognize them at all. They have prosopagnosia. I don't have that. I can, but I'm just like really, really bad at it. It's very hard for me. And for a while, when I was in the office in Mountain View working on self-driving cars, there was this guy hanging around, the office and talking to the engineers and so forth, just hanging out. And I was like, it's so funny we have an engineer that looks a lot like Sergey Brin. And maybe like 4 months or like 5 months in, it hits me and I say, oh my God, it is Sergey Brin. And the revelation I had at the time is that, okay, so he's basically spending his days in the same place as I am, talking to the same people I am about the same problem. He's eating the same food. He's wearing slightly worse clothes. So, apart from the odd private, jet trip to an island or something like that, we basically have the same lifestyle. Right. Even though the guy is worth, untold, tens of billions of dollars. So I was like, this is a pretty good life. This is like, I'm working on a super interesting project with massive world impact, good environment.
And so that takeaway was that's a good use of your time.
Yeah.
And clearly, if the founder and CEO is spending most of his time there.
Yeah, I mean, this guy can do anything he wants in the world, and he chooses
Yeah.
to spend his time here working on that problem.
Right. Okay. So even though you weren't continuing your blockchain dreams, it was probably a great use of your time and a great place to be, and you're collaborating with some of the best people in the world.
Yeah, and you have to, we haven't talked about it because I like the puzzle, right? I'm a puzzle person. I like solving hard problems. And that really drove me to the self-driving car. But there's another angle, which is the impact. And mind you, I do think that finance, some people look at it and say, oh, it's a zero-sum game. I don't look at it like this. I think having liquid secondary markets is super important for growth, for the economy, for prosperity. So
for human involvement,
right? I do believe that, including high-frequency trading, you're making the world a better place. And some people might think I'm being sarcastic here, but no, I genuinely mean it. But the impact, I would say, of self-driving cars is a lot more tangible. There's just so many people dying in road accidents. If you're an adult, if you're not elderly, it's probably your main cause of death.
Right, it's that high, isn't it?
Yeah, it's incredibly.
It's like alcohol,
high.
Smoking, car accidents, or
I think
something.
Suicides as well are going to be very high, but.
Right.
Yeah, so car accident is just incredibly high, and that can go away. That can go away with self-driving cars. So the impact, just in terms of human lives, is insanely high.
Yeah, I agree with what you said about finance, but I'll come to that. To wrap up self-driving cars, where is that industry? Where do you think it's going? It's complicated, isn't it? Self-driving cars, more complicated than people realize, right?
It's very complicated, and like many things, it's one of these things where you get to 99%, and it feels like you're 99% there, and then the last 1% is harder than the first 99%.
And that's everything, right?
It's just getting to the smallest corner and the smallest details. Because if you want to compete with the average driver, it's not too bad. You look at how many times, how many miles an average driver has an accident, and I think the number could be completely off. Offhand, I think I remember it's like every million miles you have a fatal accident. But I could be off by orders of magnitude. That's just like out of memory. But that's the average driver. You don't want to be like the average driver because the average driver includes a bunch of drunkards. So you want to be like the average diligent driver.
Right.
And the average diligent driver who's paying attention to the road, is not texting, is not drunk, is actually quite good. So getting to that level is really, really hard. You're getting into very, very rare situations. So even as you've covered most things, it's really hard. And you'll see sometimes there's a startup that come out and they have this video of a car driving on the road and so on and so forth, and like, oh my God, they're already here. But getting to that baseline is actually quite easy, especially with the AI tool that exists nowadays. Right. Getting to the point where you're going to need, you're going to deal with. There's an early TED talk, I think, by one of the lead engineers. I think now the CEO for Waymo, who's talking about the situations where you have this lady on a wheelchair chasing a goose or a duck with a broom in the middle of an intersection.
Wow.
So you have to deal
That's
with
like the worst case
this
scenario.
type of situation. And actually the car handles it. You'd be surprised, but most of the time just stopping is a pretty good policy.
Yeah.
You just you stop, you wait. You can't do that all the time, of course, otherwise your car is going to be stuck. But it works. So just dealing with all of these hedge cases, it's a massive endeavor. And I think it's growing, and clearly it hasn't come at the pace that people were expecting.
Yeah. Same as you, not the pace you expected, or did you?
No. I was more hopeful that he would go faster.
Yeah.
And there are cities where you find those services, and I'm still 100% convinced that it's going to come. But it's definitely going to be a longer journey that I would say what people imagined 5 years ago or 10 years ago.
Okay. Has Tesla solved the self-driving problem, or do they just have the best marketing because it works to a certain degree on cars that are on the road, whereas maybe Google X doesn't have those use cases?
Yeah. So I'm skeptical of their approach, but first of all, the fact that they limit themselves to using like cameras as opposed to using LiDARs, it's just, your life is so much better with a LiDAR. If you can see everyone around at 150 meters, why would you just rely on cameras? And the LiDARs are not even that expensive.
Okay.
And I feel like a lot of it for Tesla is because they've made this promise that they'll be able to retrofit the older cars, but I feel like it's hindering them to be relying on this. I think using end-to-end AI as opposed to, and I don't know that they're using end-to-end, but it feels, at least from their communication, that's what they're talking about, as opposed to having a more structured approach, I think make it harder to verify and to get comfortable with the safety of the software. Now, that being said, there's a quote, I think, by Peter Thiel, which is like, I don't understand why people would take any bet against Elon Musk. And so I don't want to bet against a guy. So even if I look at Tesla, the stock, and I say this is overvalued, I am not going to short it. I'm just going to stay out of it. And I feel like intellectually, I also don't want to take a position. I'm kind of skeptical, but I'm not going to bet against it.
Yeah.
Just going to stay out of it because I don't know.
Yeah, as they say on Wall Street, the trend is your friend, right? It's like,
yeah.
If it's going that way, even if your model tells you different and something tells you different, it's smarter to go with the trend.
I would need a lot of conviction to. I would need a lot of conviction to take a strong bet against he's doing. The guy. Look, the guy managed to make like a profitable rocket launching company and revolutionize rocket launching. Just like as a rule of thumb, it doesn't matter how he behaves on Twitter or whatever. We'll say, oh well, it was just the engineers at SpaceX. Just like look at the other side, take a little bit of distance, and say like, okay, just not going to bet against that guy.
Yeah. I actually quite like Peter Thiel. He's got some great quotes. Competitions for losers. He's got some great IP.
Well, that's part of my journey here, by the way. It's just like figuring out on Wall Street that, he describes a pattern of people who are like, they're good in school. They get very, very competitive because school makes you want to be competitive. Yeah. And they get into these games because they like winning.
Right.
And they like hard competition. So you go into finance because it's like all the smart people are here. And you get this great feeling of competition. It's like, oh, I'm going to beat them and so on and so forth. But at the end of the day, it's a lot more productive to go into a field where you don't have as much competition, where it's like actually a lot easier. You may not feel as good about yourself because, you're saying like, well, this is not difficult. But what are you trying to do? Are you trying to prove to yourself that, you're good at winning a game? Or are you trying to build something?
Yeah, and then this is a great point, and this is all probably covered in Peter's book, 0 to 1. But in order to not be competing all the time, then you have to create something new, which takes a lot of risk and chances, which, like you said, we're not conditioned to in our education system. We're conditioned to get the test right and to win by a little bit. And that's not always where the greatest advancements are in technology and humanity.
Absolutely.
Yeah, Peter has some great points. Not betting against Elon is a smart thing. I saw a recent New York Times article that wasn't talking about electric cars. It was talking about the fact that Tesla produced like double the volume of cars year on year, and how just its car production, inventory management, able to change even the technology of their cars and their production system was smoking the traditional car makers. And so there was just an interesting note. Forget about the electric car innovation. Just their innovation as a manufacturer was making everybody look potentially bad. And I spent some time at Ford Motor Company, and I could see how that could happen. So I think that's smart. Maybe let's not bet against Elon. But also, I don't believe all the stories I hear about the driverless car mechanisms. And I haven't been in a Tesla, but I probably wouldn't put driverless on when I was in there.
The thing also is that one of the early intuition that that Waymo had, which I think is quite good, is they started their system for highway assistance. And so they got some Googlers and they said, do you want to test drive something? And they made them some papers saying you need to keep your wheels, hands on the wheel at all time, and you're going to be recorded and so on and so forth. And then they do that, and then they find out that the people who say, yeah, sign all these documents, they started, saying, like just laying down, completely reclining in the car, applying makeup or all this sort of thing. And what they realize is if you have a system that's like 99% safe, it's really hard to get people to pay attention. Why would you pay attention when the car never has a problem? Right. And so in some sense, it can make it less safe because you never have to do anything. It's hard to pay attention because 1 in 10,000 times we're going to need you to do something. That doesn't work. So you either have something that's very basic, like lane assistance or like cruise control, or you go all the other way. But there's a valley where automation can actually make it more dangerous. Huh. And the way that Tesla handles it is by trying to monitor you. But I would feel it almost, I worry that I would feel it almost more tiring to like have to pay attention without actually driving.
Right. That's interesting. So it's monitoring you and the road potentially at the same time. Wow. So many question marks. But like you said, when this technology gets mastered, it will change the world in a massive way, won't it? Just back to finance, and then I want to jump into your journey with Tezos and the blockchain. I agree with you. I say that even high frequency trading, and I know people think we're joking, does help humanity. I think all finance helps humanity. When I started Wall Street, we had a fixed floating swap book. It was an innovation on Wall Street. It just had done 5 years earlier, where you could actually borrow or lend at a fixed rate versus a floating rate for however maturity you want. And we created that derivative instrument. And I know on the back of it, projects were built, dams were built, student loans were made. I mean, this depth of finance empowered so many things in the world to be done. And I think it's maybe something we don't talk about enough in the blockchain industry, but pure finance has almost always marked the upsurge of humanity, whether it's the Industrial Revolution or everything. And again, the best stuff typically came from New York, London, Hong Kong, the major financial centers, but now it's happening on the blockchain. So it's an important point to make. Tell me about your journey then of this puzzle that you started off looking at, but then you also took some action. You tried to go from 0 to 1 early when a lot of people would just admire the tech in the background, have a nice job at Google, hang out with Sergey. You didn't have to go down this route that ended up taking you on quite a ride.
So it was, for me, started with Bitcoin, of course, and Bitcoin was at a confluence of a lot of things that I was interested into. So first there was, the theory of money and banking, what makes money money. And a lot of things that tripped people about Bitcoin at first is that it was, say, it's backed by nothing, that can't possibly work. And I had done a lot of thinking, before Bitcoin, I had done a lot of thinking about why does money have value? Understanding, what is a convenience yield? Like, how does fiat currency work? I was interested in, the Swiss dinar, that wonderful story about fiat currency not backed by any government and having value in Kurdistan. So I was really into that, and I had come to the conclusion that the best money is backed by absolutely nothing. It just has a scarce supply and is backed by nothing. So that was not an intellectual obstacle for me, on the opposite. And in fact, early on, people told me, Bitcoin is backed by energy. And I was like, I'm not interested. Because, energy production is going to go up a lot. And so as a result, of course, it's not backed by energy. Right. But I think people were trying to say that to make people interested in it. And I was more interested when I found out it was not backed by anything. That made it a lot more interesting. The other thing that so theory of money and banking. How does money work? Why does money have value? Exchange and so on and so forth. The other thing that I was interested in was cryptography. I had been interested in cryptography since basically high school, when I started looking at number theory and encryption. And I was in high school learning about number theory at the same time that internet was really picking up, and we were talking about encryption on the internet. So I had this interest as well.
Yeah, and there's massive amounts of cryptography just on basic internet that people don't even understand. And after talking with Silvio Micali, who created a lot of these
well, he was came up with a lot of stuff.
he's like, Brian, you need security for anything you do, and it's not always because of bad actors. It's just because in a long enough timeline, every system has randomness and will break. So I don't think people realize how much cryptography is in their daily lives before even cryptocurrency came along.
No, absolutely.
So you're fascinated with that, okay?
So I was fascinated with that. Computer science. I one of the things I like to do in high school. I competed in the informatics Olympiads. So just like algorithms and computer science. So I was interested in that.
What was
And
your
it's also,
programming language of choice?
It depends on the task, but for competing, I was using C.
C, okay, or C++ or C.
Just C.
Okay.
Just C. No time for C++. You have a problem, you need to solve it in like a couple hours.
Yeah.
C++ is when you might want to write maintainable code that's going to be shared by many people.
Okay.
In these circumstances, the code quality doesn't matter. You just need to get to the answer as fast as possible.
Right, okay. I was taught BASIC first, then Fortran. I did C. I took in a course in assembly language at UCSD.
Yeah.
Well, I have no idea why. I never really used it. But at least I understand some of the building blocks. But all the smart kids at MIT studied computer science.
Yeah.
I studied mechanical engineering because I knew. But the smart people were at computer science. And so you love that as well.
Yeah. And finally, there's a political project around cryptocurrency and around Bitcoin. And, I was also on board with that, which was, empowering people, giving people sovereignty over their financial transactions. So for me, it's just like the intersection of so many things. I mean, I was interested in decentralized currencies before Bitcoin came out. So when Bitcoin comes out, at first I'm skeptical because I hear it's backed by energy, and so I don't like that. But then I look into it and it was like, oh my God, this is fantastic. So I caught the bug early on, and I started thinking about it. And my first thought was, what can we do with Bitcoin? What can be built on top of Bitcoin? And then I started thinking like, okay, how can Bitcoin evolve? What else can be done? Because it was the first iteration of a system, but I could see some issues. So the lack of privacy was an important problem. Everything was public. You can't really have financial sovereignty if you're going to force every transaction to be public. The other one was the scalability. If you can only do a few transactions per second, that's a problem. Although at the time, what I envisioned was that you would have some international network of financial intermediaries who would basically scale. So the idea was that you just need like something basic where you have like few clearing transfers between financial actors. But now I've come to see that it's actually important to be able to for people to do this without intermediaries. I think that's really part of the value prop. It's not enough for intermediaries to be able to enter the market costlessly. It's also important to have this desired access. And the third one was the cost. You need to spend a ton of energy in order to secure Bitcoin, and that creates inflation. So in Bitcoin, inflation is supposed to go away, but if the inflation is supposed to go away, there's a good chance that security goes away. So how can we avoid all this inflation and spending it on energy, and at the same time, like keep a good security budget? So that's a proof of stake angle.
Right, and you saw this 2013, 14, you're starting to formulate these ideas. And about the same time, Ethereum's coming out too. So you're seeing...
So Ethereum's not even coming out, but Ethereum's like a project. Yeah, they started to talk about Ethereum and smart contracts.
So you kind of see, if Bitcoin was version 1, is Ethereum version 2 to some extent? I mean, it's obviously maybe the next big iteration.
It's a big iteration, and I would say at the time, I wasn't convinced that smart contracts were going to be that big. I mean, I was convinced enough that I thought that Tezos should have smart contracts, right? So I was like, okay, yeah, smart contracts are cool, smart contracts are important, but I thought that they would be secondary to things like privacy, for example, because I still think the main use cases for this platform is to be a form of money, store of value. And it's nice to have. Smart contracts are nice to have, but less important. But the way it's turned out, smart contracts have turned out to be even more important than all of that.
And it's important to have a system that can also be flexible going forward. And a system of governance can be flexible going forward. And I think we'll get into some of that governance IP. So you're watching Bitcoin, you're watching Ethereum evolve, and you're formulating Tezos in your mind. Was this always something you were going to do? Did it become clear? And then when did you finally formulate it?
So I started thinking about evolution. One of the first person I met, I was traveling to London. I go to this hackerspace and I start, working on something. And there was a guy who comes around, and when you start talking about Bitcoin, and I'm not sure. I've never been able to confirm. I think it was Amir Taki, but I'm not sure. I've talked to Amir and he was like, yeah, maybe it was me, but so I'm not sure. But anyways, I talked to someone, and this is around maybe 2011 in London about Bitcoin, and I said, look, it's great, but what if something better comes along? What if there's what if something with privacy comes along? What do we do? And the person says to me, look, Bitcoin is not a technology. Bitcoin is a ledger. Bitcoin is just a ledger of who owns what, and the technology can be replaced. You can just keep the same ledger and replace. And I found it, at the time, I found this answer completely satisfactory. Like, all right, yeah, we can swap out the technology, that's great. And then you start thinking about it and you say, well, okay, but who does it? And how do we agree to do it? And the logic at the time was around forking. So, like, well, you'll have two versions and then people can choose whatever version they want. That doesn't work when you have network effect. You can't just tell people now, well, now there's two Bitcoin and you can use which one you prefer. No, you can't really use which one you prefer. You have to use the one that's going to win because the other one's not going to get really much value. And so which one is going to win? Is it the one with a better technology or is it the one that people expect to win? And it's the one that people expect to win. It's a beauty contest. In some sense, if I expect this one to win, then it has network effect because I expect that other people are going to expect the same thing. And it becomes like this weird game based on legitimacy, perception, and so on and so forth. And I think that can stall progress.
Yeah, yeah. And this was kind of the essence of the TED Talk you gave, which I recommend people to watch. I'm sure we'll have links below. But there's a whole psychology, game theory, humanity piece in here that you just quickly talked about and sometimes gets glossed over in this space. I had Stanley Kulichev here and he said, Brian, the reason I like this is because anytime anybody can hard fork and take it another direction, and that makes sure that I give the best code every day. And everyone says, okay, great. But when you think about it, you're like, well, wait a second. It's not that simple, is it? No. And when you look at the hard forks in the past, and I've had Roger Ver on here, literally giving out free Bitcoin Cash to everybody. If you want to email Roger, he'll literally give you free Bitcoin Cash because that is an evidence of a hard fork with damaging consequences. And just having the option of hard fork, like you said, actually stops innovation sometimes and stops progress. And it's something that needs to be talked about. Right?
Yeah, I mean, it's mostly that you can't count on it. You can't count on hard fork giving you progress because if a random person comes up with a hard fork, it doesn't matter how good the idea is. They're not, it's not just about having the ideas, it's about having the exchangers on board. It's about having all the actors who are using, it's an entire ecosystem that you can't move.
Right.
And
let's define hard fork for anybody who doesn't necessarily know what that is. Let's maybe you can explain it with an example or just in theory, because
without going into the difference between a hard fork and a soft fork, the idea of the fork is that you have one piece of code and everyone runs the same code to access the blockchain. We're all running the same software. And someone comes and say we should have different rules for validating the blocks. Maybe we have a new kind of transactions, or maybe we do transaction in a slightly different way because we want such and such features. So they come up with a new piece of code. But the minute that someone comes up with a new piece of code and people run that code, the chain is going to split into two chains. One chain is going to have blocks who run the old code, and one chain is going to have blocks that run the new code. And they're going to be incompatible with each other. And that's a fork. You can visualize a fork. But even though those two chains can coexist, on the internet, like you can see both. In economic space, only one really is going to exist. Only one is going to capture the economic value.
Yeah.
And
because
what
network
determines
effect is everything. So the place where more people go will, by definition, be the winner.
And that's based on social expectations. It's not based on
tech or anything.
On tech or anything.
And that's the fascinating component about governance. Like I said, I was giving you a tour of the studio. I mean, I always see crypto as a combination of technology, marketing, and politics somehow, and maybe psychology, because you said it's not as simple. And look at Bitcoin, Bitcoin Cash, Ethereum Classic, and there's other hard
finance
forks.
Also, economics.
And you can see how it goes wrong. I was talking to my students the other day, and tell me if I'm wrong here. I'm really curious on your thoughts, Arthur. But I called the Boston Tea Party the start of a hard fork, whereas like the American Constitution started, and you had to choose. Are you going to stay on Team Britain and the King of England, or are you going to go this new way? And there's real consequences, and you don't know who's going to win. And pick. Guess what? Your life is at stake, your future is at stake, and you have to pick.
Yeah.
And you don't know who the winner is, but you know that something's not right, and it really bothers you, right? So maybe that was a hard fork. I don't know.
Yeah, you can look at it like this. Yeah, it's like secession.
Yeah, like Succession. Yeah, like the movie, right?
No. Sorry, it's my accent. Secession.
Oh, Secession. Okay, right. Yeah.
Like you secede.
Yeah, exactly.
So like you have like, US seceding from England, and then all of a sudden it's like.
And you can see the consequences, and the market share and all of that. And so it's not something that you can casually do. No. And again, Stanley, and I love what Stanley's done, and I appreciate the point of view, but he's like, the threat of a hard fork keeps everything honest and good, but I'd like to go deeper on that, because you see lots of other consequences.
It helps. I would say it cuts.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.